Welcome to my weekly market roundup, 19th September 2020. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks using Q trading systems and techniques. This is my email ID tradingprofitably@gmail.com. My traders forum website sagarnandi.com. YouTube channel Trading Profitably and Twitter handle Sagar Nandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Let me make sure you are able to hear me and see my screen. If you can, please send me a message through the YouTube live chat. I will continue. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Thank you, Harry. Thank you, Jeffrey. This is a live session. I have not prepared other than creating a few charts from QEdge. As always, I will use Q Elite and Q Global Q Finder for technical analysis, Q Vital for fundamental analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. Hi, Mike. There are few tips and tricks of using Q systems, and one of them you know already. I announced it earlier that all the Q Zenith based systems, Q Vital, Q Edge, Q Index can now be copied into a different name. Usually there is not much use of that unless you want to keep a record of how, for example, Q Edge looked like, how the stock scores looked like in the past. In that case, after you run Q Edge, save the scores, or you could run Q Vital on an universe of stocks and save that Q Vital with a date stamp. Sometimes I also do another thing, that is what I have done today. Q Universe. This is the same file as Q Vital. I just renamed it as Q Universe. I hope you can see the name Q and then Universe. I don't know where you can see the name. Let me open the menu up. Universe with capital U. Universe, Q Universe. If you do that, if you rename Q Vital as Q Universe, nothing else, then what it does, it changes the color. So that when I go back and forth between Q Vital and Q Universe, I know which one I am looking at. Why I use Q Universe sometimes, I will explain later. Let me continue with the market roundup, and then sometime later when I am using Q Universe, I will come back to it. Let's have a quick look at the global markets, starting with Australian market. And for global markets, I use Q Global running on Metastruct. That's why I named it Q Global. AXJO, it was moving sideways and it is still moving sideways if you look at the daily chart. If you look at the weekly chart, it came to the memory resistance, created a doji at the top, then a high close doji. After that, backdrop color changed to bearish and it is remaining bearish for 3 weeks. This week's shape is also bearish. Therefore, though looking at the daily chart, it is moving sideways, the weekly is becoming more and more bearish. It may still move up from here because there is a memory support line in the daily. The memory supports work remarkably well. That's why I'm not going to short it now. What was the right time to short it? Probably when weekly displayed a doji candle and came down from there. Which week was it? Let's say 28th August. That was the end of the week. That means somewhere here. That would be the ideal point anyway, because that time it was at the upper edge of the range. That is the ideal point to start looking for shorting opportunities. We might not short AXJO, but we might look at weak fundamental stocks in weak industries at that point, short it at that point, and as price came down, now it is at the lower end of the range. Now we would book profit, at least partial profit. It is continuing to move sideways unless it can break out from the memory resistance. What about topics? Japanese index. This was also moving sideways. In a way, it is still moving sideways. Unlike Australian market, where the weekly was bearish, Japanese market is more bullish on the weekly chart, but on the daily it is moving sideways and it is at the upper end of the range. That's not a point where I would like to buy. If daily comes down now, gives a bearish color candle, still I am not going to short because the memory support is going to catch up with that down candle if that happens. So there is no trading opportunity in topics. It's also moving sideways on the daily. Chinese market CSI 300 index. This was also moving sideways and that is continuing. Here the weekly is also moving sideways. Daily, weekly both. Only Indian market among the global markets was in an uptrend. Let's look at that. Nifty 50 index. That uptrend is continuing in the weekly. The daily has now become range bound. Whenever we see a memory resistance and memory support, immediately we know that we have lower high and higher low. In this case it is a box, but technically it is also a triangle. Lower high, higher low. Always it's a triangle, of course a very wide angle triangle. It's in a range right in the middle of the range, not a point where we can buy or short. Remember in the last video webinar I mentioned that when price came to the weekly memory support and started to go up, that would be somewhere here. That was the time to buy fundamentally strong stocks in strong industries. Now it is right in the middle of the range, no trading opportunity there. Now FTSE index, UK market. This was also moving sideways and that sideways move is continuing. Therefore, what we are seeing for many weeks is that the global markets are moving sideways except India market, which is in an uptrend. And I mentioned earlier that Indian market tends to follow the USA market more closely, probably because many US investors are investing in the Indian market. I don't know any other explanation. Economically, they are not so closely linked. Maybe from the stock market perspective, they are more linked. All the other global markets are moving sideways. USA market is of course bullish, but before looking at the USA market, let's look at the commodities, oil and coal. Oil ETF USO is continuing to move in a very narrow range. in the daily chart. In the weekly, we can see it dropped little bit, but then recovered again back inside the range. By the way, when you are using Q global on metastock, when you see the scale is compressed, like in this case, in the daily chart, you may click somewhere on the scale and drag it up. That will expand the scale. And you may do that on the lower end also. Then the chart will become clearer. And now we can see it was moving in a very narrow range. You can widen it a little bit. Tried to come down but went right back in. And now again it is inside a triangle pattern. I use the simplified terminology. Don't use different terminology for wedge or flag, etc. Not exactly same, but they are all range bound markets. You may say it is also inside a wide triangle. Right in the middle of the triangle, no trading opportunity there. And about the scale, if you want to rescale it, you may right click and choose rescale y-axis. That will get it back to the default setting. No trade setup in oil, moving sideways, narrow range, and gold. It was also moving sideways, and that is continuing. In the last webinar also, I showed it was inside these resistance and support memories. That was Wednesday's webinar, and it is continuing to move in very narrow range. Same is visible on the weekly chart. Therefore, there is no trading opportunity here. Before going into the USA market futures or ETFs, let's have a look at the sectors. Usually I look at the futures or ETFs first for the USA market, but this time let's make an exception. Let's look at the sectors, and as usual I look at the picture of 1 week ago first. At that time, from 1 week ago, before that, it was bearish market at the sector level. 4 sectors were up, 7 were down. From that it became even more bearish. All the sectors became negative. That was 1 week ago. All the sectors became negative. Prior to that, some sectors were positive. The red bars represent current week's performance, green bars previous week's performance. This is 1 week ago. So 1 week ago it turned from bearish to even more bearish. However, this week at the weekly level, sector level, it turned bullish, and this is a picture from the current week. Red bars again current week's picture, and we can see most of the sectors went up. Which sectors went down? They are utilities, consumer staples, communication services. Utilities and consumer staples are clearly defensive sectors. Communication services has defensive and non-defensive industries both, or non-defensive stocks also. However, they are more defensive than non-defensive. Therefore, the sector level picture this week is showing bullishness. And energy had a very big reversal. Previous week ago, it was the very worst performer by far. And this week, it is the very best performer by far. That was probably because oil also dropped and then recovered. That sudden drop and equally forceful recovery probably led to this huge reversal in energy stocks. Because oil moved erratically, it may not be safe to look at this huge up move in energy sector and start buying energy stocks. There may be some opportunities, but may not be the safest opportunities. The weekly sector picture is bullish. What about Friday's picture? This is Friday's picture. Weekly was bullish, however Friday was pretty bearish. Only one sector went up, but that was by so small percentage, you may say it was at unchanged. healthcare was unchanged and all the other sectors came down. Real estate came down hardest, followed by utilities. Again, defensive sectors. Therefore, in the weekly picture, we saw defensive sectors were down, and on Friday it was down very much. Let's go back to the weekly picture again. Defensive sector, and here of course utilities and consumer staples, not real estate. In the weekly picture, they were down, two defensive sectors, and on Friday, two defensive sectors are the worst performers. Therefore, it shows that defensive sectors underperform. At least from these sector pictures, we see defensive sectors underperform. Of course, real estate. Where is real estate here? Real estate, yes, utilities, real estate, both are underperformed on Friday. Now, is there a buying opportunity looking at this Friday's picture? One way to find that opportunity is to look at the top 10 industries using their scorecard. This is a chart I created from the sector scorecard in QEdge. We could do it on QEdge also, but for this webinar, I created a chart. Here I have the 5-day score and the 1-day score, and I am plotting the best performing sectors over 5 days, and I am trying to see is there a sector. Okay, why I am saying sector? These are the industries. Let me step back again. I looked at Friday's market and saw that all the sectors were down. Healthcare was unchanged. So I thought, is there a buying opportunity? Then I looked at the industries, 10 best performing industries over 5 days, and Friday was down, but I wanted to see, was there any of these best performing industries over 5 days, is there any of them that retained its score? Maybe percentage wise it declined, but it retained its score over 1 day, that is Friday. And I found steel, I found food distributors, you may also say of course coal and consumable fuels, computer and electronics retail, oil and gas exploration, to some extent casinos and gaming. But if we exclude that, at least these few, coal and consumable fuel, computer and electronics retail, oil and gas exploration and production, steel, and food distributors. In fact, steel's score increased little bit over 1 day. Food distributors remain exactly same at 139. Coal and consumable fuels remained exactly 7 at 147. So steel is the one which is among the best performing industries over 5 days over the week. And on Friday, though the market came down, maybe steel also came down, we have to check. But as far as relative score is concerned, it actually went up. Therefore, we may look for buying steel stocks. And we could do that not only on Friday, we could of course look at it using QH when the steel industry was starting to go up. But before deciding to buy any stock, be it in steel industry or any other strong industry, let's now look at the market level and see, was there a reason that we could look for buying stocks. In the last webinar, I mentioned that though the market was looking bearish, some ETFs, market ETFs, and many of the leading stocks had support. Therefore, I was not going to take many short trades. And now let's look at the market level. I'll come back to steel industry. And now instead of using ETFs, let me today use the futures. Do I look at futures or ETFs? Like SPY or ES? I do both. And if any of them is showing support, I avoid shorting. And you could of course look at them every day as I do. And I hope I should be able to open ES futures. Okay, now look at the weekly daily together. This is the S&P 500 E-mini futures ES, and this has a very clear support, multiple memory trendline support. Price hit that support on Thursday and bounced, and Friday also it hit that support and bounced. Therefore, though the weekly color is bearish, because of this support I was not going to look for shorts. Instead, I could look for buying opportunities in individual stocks both on Thursday as well as on Friday. I'm not going to look for shorts next week also because of this support, and this support, similar supports are there in other futures also. Nasdaq E-mini futures NQ, similar picture. Weekly color is bearish, however daily has a support. On Friday, price actually closed higher. On Thursday, it had hit the support and precisely reversed from there. As I mentioned many times, if you are keeping an eye on the daily or weekly trendline support, memory trendline support, you may then move to the 5-minute or 10-minute interval and take very precise entries. In case of support, you may take long entries. If you are looking at weekly daily memory resistance, you may take bearish entries using 5-10 minute intervals. In this case, for Nasdaq, you could take very low risk buying opportunity using the futures when it hit the memory support. And for swing trading, because of this support, just like as it was in S&P 500, I'm not going to look for shorts. And if I look at the Dow futures, that is YM, this also has memory support. On Thursday, again it hit the memory support and reversed from that. Again, a reason for me not to try to short. And the last market futures, Russell 2000 futures RTY, doesn't have memory support. However, it didn't try to go down also. The traffic light color is remaining bullish on the daily chart. And in the last webinar also, I mentioned that RTY was stronger than others. I looked at IWM at that time in Wednesday's webinar, and I showed IWM was the only market ETF where the backdrop color was yellow at that time. And from there, price didn't come down. Now it is at the memory resistance, very close to it. Therefore, I am not going to try to buy IWM now unless it can break out of the memory resistance. I would rather buy the instruments at support, that will be Nasdaq, SPY, S&P 500 and also Dow Jones. Therefore, we don't see any reason to short the market now. We can buy. And now let me go back to the steel industry. Before that, why don't I look at the market using Q edge also. Over 5 days, we saw the sectors were up, and from Q edge, advanced decline breadth information, we see over 5 days sectors were up, 73% of the sectors are up, industries to 64% and stocks to 57% up. And we saw Friday the market was bearish, and that is visible from the advanced decline on Friday. 91% of sectors, 80% of industry, 73% of stocks went down on Friday. Friday was very bearish, but again that may be the buying opportunity because market futures are at support. What about weekly finder? Weekly finder is also bullish. Finder shows the balance between bearish and bullish signals across all the important Q signals. If we see all signals, it is more bullish than bearish. Strength signals very clearly bullish. 85% signals are bullish. Continuation signal, trend continuation, also bullish. Only reversal signals are bearish. And if we see Friday's finder, we expect it to be bearish. That is true. 73% of all signals are bearish. The other pie charts are also showing bearishness. That is expected. However, because the market futures are at memory support, we could look to buy, and we saw, if we looked at industry scorecard sorted by 5 days, reverse the sort order by double clicking, steel is one where, not rectangle, let me choose the arrow, over 5 days it is one of the best performer, and on Friday, though the market came down, its relative score improved. That is why I may look for buying stocks in steel industry. It is strong and held on to its strength over last 5 days, 2 day and 1 day period. And if you look further back, it was very weak earlier. Therefore, I may look for undervalued stocks. Let me drill down to steel stocks. There are multiple stocks. I can see several stocks are undervalued. Not many has earnings growth. Only one has robust earnings growth in the last quarter. That is SXC. Time to look up SXC, and we can see it has robust earnings quality and the short squeeze potential also. On Friday, it went up by 10.8%, over 2 days 15%, over the week 18.6%. So it is steadily going up. It is 71% above 52-week low, so it has already started to gun up, and still 41% below 52-week high. So it is some distance away from 52-week high. Let's look up its charts. At a glance chart, SXC. Again, the weekly reversed right after displaying a series of bullish headwind signal. We might not take the extreme low at the bullish headwind level. As I mentioned, on the daily interval, the first bullish flow after bullish headwind tends to be a good buying point. And the equivalent would be in the weekly chart. You might say this cyan color would be the first equivalent of bullish flow on the weekly chart. From that point onward, you could start to look for buying opportunities. And now also it hit the memory support, went up. On this candle also it tried to hit the memory support and went up. So we could buy the stock at a lower price when it came to the memory support at this point and at this point. In the daily chart, that would probably be somewhere here or here. And if we look further back, we can see a bullish headwind in daily also. As I mentioned, the first bullish flow after bullish headwind may give a low risk buying opportunity. Even if we didn't take the first bullish headwind in daily or the weekly, we could look for the first bullish flow following that. Therefore, our optimum buy point would have been here. And then we could again wait for price to come down, give another bullish flow candle. So next buy point would be here. Third buy point could be here, but that had an upper tail. So instead of buying on this candle, though it had cyan color, I think, we could try to buy the next day. After that, it came too close to the memory resistance. We could watch it on Friday, and if it was breaking above memory resistance, right at that point, we could buy. And that will be easier to demonstrate using Q Elite on TradeStation. Let me go to that. Let's plot SXC here. Let's maximize the daily chart, and I'm going to first draw a line at the memory resistance level on the daily chart. That will be here. That was Friday's memory resistance on the daily chart, and then I'll switch the chart to 5-minute chart. In fact, I will change the template to fine-tune template and change the interval to 5 minutes. Now we can see how precisely we could use the early range breakout technique. After the market opened, the early range high and low points formed, those pivot levels. The early range was very narrow, and right when on the 5-minute chart it broke above early range high, it also broke above the daily memory resistance. Therefore, we could take it as a breakout trade on the daily chart and an early range breakout trade on the 5-minute chart. This should be our buy point, or you might also wait for the close of that candle, 5-minute candle. Stop would be just below recent low. In this case, there was another important pivot line, that's the magenta pivot line, that was previous day's close. So we might put stop just below previous day's close. This should be our entry. Our risk could be this much, and as price went up, of course much more than risk distance was covered, we might keep on tracking the stock until its traffic light color changed to neutral, and then book partial profit, and we could decide to hold on to partial position. One technique that I have suggested also, that you could close the entire position that you might have taken using stocks and use part of the profit to buy call options. That way you are guaranteed to make a profit in the entire trade, even if the stock comes down next week. That is how you may combine the industry strength with the technical strength and fundamental strength to buy a stock at low risk entry points or as a breakout trade. Low risk entry points would have been here, 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 or here, using a swing low that is equivalent to the go with flow trend following long setup, that idea. Or you could take it as a breakout trade also. Both kinds of trades are possible using Q systems, and we can see the breakout in SXE on Friday happened with bullish pressure and extreme high volume also. So that was a valid breakout. Will I take a long position in SXE at Friday's market close? No, because it closed with an upper tail. But I could take a long position right when it broke above the memory resistance in daily, when it was also breaking out of early range high on fine tune chart. Now SXE was not the only strong steel industry stock. Strong meaning stocks that were at a lower price point and starting to go up. Remember, we saw it's not at the lowest point. SXE is already 71% above 52-week low. So it is already starting to go up. And if I look at the other stocks that went up on Friday in steel industry, and let me click the undervalued stocks filter, SXE we saw there are several other stocks that went up. Let's look at these three: STLD, TMST, CRS. They went up between 1.7 to 2.4%. And let me use the grid button to copy the ticker symbols, not Reuters symbols, but ticker symbols. Go to Registration Radar and paste it using Control V. Control V, or you might right click and choose paste, and it shows the hotkey equivalent. Control V. Let's look at these three stocks using at a glance template. Once again, this stock STLD, it is already going up. when it hit the memory support but failed to break below that, right from that point you could start to look for buying opportunities. The equivalent point in the daily chart would be this bullish flow candle. It tried to go below the watermark level, went up, creating a false downside breakout. Right at that time, it gave a bullish flow candle, and very importantly, that was right at the weekly memory support. That would be the low risk buy point using Q technique. So the buying will be at the close of that candle. Stop would be just below the recent low. You might put that below the yellow direction line. By Friday, it went up and covered more than the risk distance, and it is hitting weekly and daily both memory resistance lines. Therefore, we would book at least partial profit for sure on Friday. Friday had extreme high volume. Extreme high volume at resistance may lead to a pullback in the stock. It may not turn bearish, but it may pull back. Therefore, we would certainly book at least partial profit in STLD. Again, a stock that was technically strong, we had a reason to buy it. That was at weekly memory support when daily gave a bullish flow candle after a false downside breakout, and fundamentals were strong. Next steel stock, TMST. This is a stock that I wouldn't buy, because not buy in the recent period, because the weekly is not looking so bullish. I have the tendency to buy stronger stocks if they are in the same industry, and TMST doesn't look so strong as the other two we saw, SXC and STLD, so I wouldn't try to buy TMST. And the last one, CRS, is also looking weak, therefore I am not going to buy them. We could buy SXC or STLD using the supports and using the flow color candles. There are other ways that we can find trading opportunities other than the top down. This is what I carried out just now, that is the top down, looking at industries first, went to fundamentals after that, and then looked at technicals. The other way could be to look at our stock universe, and you might create your own universe. Here I have the mid price stocks, let's say $10 to 110, low price stocks below $10, and high price stocks say above $110. You could create many more lists if you wanted to. These lists are enough for me. So sometimes what I do, right after market open, and because I am looking for using the early range breakout technique, for example, I may run this at 9:35. It will take only few seconds, less than a minute, to calculate the stock scorecard. Then I can check if any stock is fundamentally strong and moving up. By doing that at 9:35, I am able to be ready to take the trade right when a stock is breaking out of early range high. So if we did that on Friday, and this is when, instead of using Q Vital itself, I could use Q Vital also, but I made a copy of Q Vital and named it Q Universe. If I name it Q Universe, it may change the color. Is supposed to change the color automatically, so that when I go back and forth, it shows me in this purple color, not the usual green color. Let me start from beginning. So let's try the low price stocks. Okay, I see one question. If we have a list of ticker symbols, how best to convert to metastock format? There is no way that I like to use, not very easy, but one way that I use, and that's probably the only way that we can do, we paste the ticker symbols on zenith, that is icon monitor. So let me show that. I have these leading stocks, FANG stocks and Tesla ticker symbols. I'm copying that, Control C, come to monitor. This is called monitor, the grid format for tracking symbols in icon or zenith, and Control V or paste. And now you see, if the symbols are not found, it will show one X, meaning it's not found. So what I do, I start to type, I highlight that symbol, start to type the symbol name as in ticker TSLA or Tesla, and then as I start typing, it shows me tesla.o. So I just click there. Then again for Netflix, I start typing NFLX. It shows me netflix.o. I can press enter. So if my symbol had items like IBM or Citibank, for example, let me copy Amazon, Facebook, IBM, Citibank now. Come here, delete everything, paste. You can see that for IBM and Citibank, it is not showing the cross, meaning the ticker symbol is same as Reuters symbol. So I need to only try to find the Reuters symbols for Amazon. So I just start typing again AMZN, and the moment I see the stock, I just click enter, and then same again for Facebook. That's how I convert the list from ticker symbol to zenith code. Once you created that, you may press Ctrl A, copy. Okay, Ctrl A for select, just Ctrl C is for copy. This is copies to clipboard. Now we can create one blank workspace, paste there, grab this column, and then you may go to Q Universe, paste it here. Not the easiest way. That's because the Reuters symbols are not so easy to find out from ticker symbols. But that is the way that I use. Okay, coming back. You are welcome, Jeffrey. Coming back, let's try to find, using the stock universe, some buying candidate on Friday. We could do that on Thursday also. And Thursday I found a very lucrative stock. I think it was Thursday, using the same technique. Was it this stock? Let me make sure it was in my list here. CRDF, search by value. Did it find CRDF? Yes, CRDF is in my list here. So I found a trading candidate this week using this technique, but let's try to apply it on Friday first. And you may ask me, you prefer mid price or low price stocks or high price? If you don't say anything, let me choose the low price stocks, or mid price, maybe mid price stocks. We could do both. I click the peer analysis button that brought all the mid price stocks in my stock universe 1527 to the custom list column, and now it is retrieving data from Zenith and calculating the scorecard. This is a very effective way to find the strongest fundamental and technically strongest stocks, means stocks that are moving most right after market open. And you may do that at 9:35. You may see only 60 seconds it takes to calculate the scorecard for 1500 plus stocks. I go to the scorecard. First thing I do is click the 3-star button, and instantly I have a list of stocks that went up significantly on Friday. And if you carried out these few steps at 9:35, you would find the strongest stocks at that time also. And next step would be to look at them using technical charts. I tend to use Q Global, Q Elite together. Let's use Q elite in this case. So I click the grid button. Now I am going to go to sonar using radar interest station, pasted the symbols there, and on the top part I am going to change it to daily chart template. Of course, in real life trading I will use multiple monitors. I will keep radar on one monitor and chart on another monitor. For the webinar I have created both radar and chart on the same monitor so that I can go through them one by one. So OSPN, you see, on Thursday it very beautifully held support. By the way, I didn't prepare for this session. I am looking at the stocks along with you. On Thursday it held support just when the market futures held support on Thursday. That was another reason to look to buy stocks on Friday, and it beautifully went up on Friday. We could buy this stock OSPN on Thursday's close or at Friday's open, both. Fundamentally we already know it was strong. That's how we shortlisted these stocks. And industry, of course, we could look up, but let's go through this list first. So OSPN we could buy on Thursday or Friday both. We could easily identify fundamentally strong stocks with possible trade setup. This one I wouldn't try to buy on Thursday or Friday because it was a little bit far from the memory support. So I would find that out on Friday and I would delete Vivo from my list. I am not interested. Next one, SCPL. Again, it went up from the last support, that was the white direction line, some days ago. If I carried out the same exercise every day, it would remain fundamentally strong and I would buy it on this day. Not now, it's already up, but that's fine. We don't need to trade every stock that we look at. Next one, SPTN. No, it has memory resistance, delete it. Next one, VCRA. This is breaking out, so I could take it as a breakout trade on Friday. And in this case, it is not only breakout, it is also a bullish flow candle that is coming after bullish headwind reversal signal. So that is a low risk. That tends to be a low risk entry point. The breakout also happened with very high activity. I look for very high activity or pressure or both. In this case, very high activity, and the breakout happened after a bullish headwind. So this could be a buying opportunity on Friday. Then JKS, it is already up somewhat from the support level. I would not consider buying it on Friday. Next one, CHRS, had memory resistance, delete it. And let me just look at one more, HZO, also doesn't have any support. So let me just keep this few. I'm going to delete. So OSPN and VCRA. OSPN look very nice at support, and VCRA as a breakout. So in Q techniques, using Q systems, we can buy both breakouts as well as buy stocks at support. Let's look at their industries, OSPN and VCRA, and before doing that, let's look at the scorecard. Now I explain why I copied Vital into Universe. Okay, let me close this one first. Now I have all these stocks in Q Universe that I am analyzing. I click the 3 star to look at the undervalued stocks that are also having excellent earnings growth. I could use the other smart filters to do different kind of filters, and now I want to do a complete peer analysis of which stock? OSPN and VCRA. So OSPN. I'm going to click the fundamental peer analysis button here. If I used only Q Vital, then my stock list in stock tab will be updated when I carry out the peer analysis. That is why I created a copy of Q Vital as Q Universe. So I have the full list of stocks of my universe stocks in Q universe, and when I carry out the peer analysis, I'm not going to override this universe list of stocks because I may go back there. I just applied 3-star. I could do other kind of filters. I may go back there. That's why when I carry out the peer analysis on OSPN, I didn't want to lose my universe of stock scorecard. So I carried out the peer analysis. First look at its scorecard, OSPN. We already knew it was a star candidate in terms of fundamental. That means great valuation, great earnings growth, not only in the last 3 quarters, also in last 3 years, has a short squeeze potential. It's very good fundamentals. And now I can look at its peer stocks. See what I meant. When I looked at the peer stocks, if I just use Q Vital, this would override my entire universe of stocks. So it will only show 80. But because I created a copy of Q Vital as Q Universe, I am still having that list of stocks. This is a trick I use to speed up my stock finding, trade finding. So I may look at the 3 stars again, and I see OSPN is actually the best performer. On Friday we could look at, let's just look at next one, SCWX. Let me use Q Global. SCWX, secure works, and if it takes time we can always go back to Q Elite. SCWX. This is having memory resistance nearby inside a narrow range, so I'm not going to buy it. So as far as OSPN and peers are concerned, I think OSPN is a better candidate. That is one technique you could use soon after market opens around 9:35 to look at your universe of stocks and do different kinds of smart filtering based on fundamentals. Look at the strongest stocks and then look at their technicals and industry. Now instead of using the smart filter for star or 3-star candidates, let me reset that filter, and I could just look at the stocks going up using this short up button, and I could see play is undervalued and went up. The first one, BE, went up, but it was not having good valuation or good earnings growth. I could look at play. So let's look at play. Why not? Let me clear the metastock charts, Q global charts. Come back to Q universe. Look at its chart using Q global. Okay. Metastock is giving data connection issue. So let's look at play using Q elite. It's inside a triangle. Memory resistance support both are there. So I'm not interested. Now I can delete play. Now let's look at this and this stock, these two stocks. They are overvalued, but both has good earnings growth. Let me use trade station. Go back to at a glance. GNMK. This could be a buying opportunity. It's not perfect go with flow candidate because the weekly is not cyan, but because it pulled back a lot, we don't expect it to become cyan. It tried to go up, had a 1-day pullback, and then went up strongly. Medical equipment and supplies. I think this is an industry that is doing well last few days, so you could consider buying it. Went up by 11.91%. Now if you look at it using intraday chart, remember we found this stock right after market open. either these or similar stocks. And I change to the intraday chart template. Give it a few seconds. Yes. And in the morning session, I would use 5-minute interval. See, if I carried out the exercise at 9:35, by 9:40, I am ready with a few stocks, and this stock would be seen as breakout candidate from early range high right at 9:40 at this point, right after 9:40. 9:40 would be this candle, and next candle, that's the 9:45 candle, closed above early range high, or if you wanted to wait, you could buy here. In either case, stop would be below early range low, and it closed much higher, giving much more than the risk distance as profit. This is a very useful technique, and I used this technique to trade this oncology stock CRDF, and this was less than $10, so I found it from the low price stocks. I carried out the exact same exercise, and you can see I shared the snapshot. On that day, CRDF came right at the top, and I might have looked at 1 star because this was not having great valuation but good earnings growth. Among those stocks, this was the best performing stock when I shared it. Of course, by that time it has gone up by more than 50%. It had a short squeeze potential, and I saw the news oncology stock, and it had some positive data apparently. Remember, we could carry out this exercise using only 30 seconds or 1 minute, and we could be ready within 5 minutes to buy the stock. So that was, when did I share it? 2 days ago, September 17th. September 17th. So that would be Thursday. Let's look at CRDF. CRDF pulled back here, however, held above the yellow direction line. And I found it on Thursday, right when it was going up sharply, and there was a positive news. When I found the stock and the positive news oncology stock, I went to the fine tune chart 5-minute interval in the morning session, and right here it broke out of a very narrow early range. You could buy it right at this point, and I shared in the post from there to the day's high, it was 72% gain. You could book partial profit on that day itself. I was holding the stock on Friday also, thinking that the stock may continue to go up on Friday. It didn't go up much on Friday. I think it went up somewhat. It still went up by 7%. Let's scroll to the right hand side. It went up by 7%, but not 50-70%. So I booked partial profit on Friday. And then, because I could catch the stock early on Thursday, let me change the template to the Q protection signal now. I moved my stop to this level. My entry price was actually below that. Somewhere, I don't remember, somewhere here. So I could buy at this price, book partial profit at this price, and I have already moved stop to above entry price, making it a almost guaranteed risk-free trade. I usually not like to open too many trades, 30-40 trades at a time, but if I have been able to move my stop above my buying price, then I don't count it as an active trade. The stop is in place, and if it goes up, great. If it comes down, hits my stop, that's also fine. I will still end up with reasonable profit. Why? Because I have exited 2/3 position, not half position, and my break even, my stop is also above my entry price, and I have exited 2/3. 1/3 I may let it play. Sometimes you may carry out this exercise on low price stocks also, because biotechs, I'm no expert on biotechs as an industry, but sometimes biotechs may go up a lot. Let's carry out this exercise on low price stocks on Friday. The same exercise, and I'm using Q universe for the same reason. And some of you has very powerful computer, you may not need that or want that, but when I don't use Q Vital, for example, I'm coming here and clicking the pause button, so it doesn't consume any processing power. Going back to Q Universe, it has already updated the scorecard, and I'm going to look for the best performing stocks, and you see many stocks went up heavily on Friday. And the second best one has great earnings growth also. It's a pharmaceutical stock. It has great earnings growth, excellent short squeeze potential, already to 55% above 52-week low, still below 52-week high, 69% below that pharmaceutical industry, or you may also say biotech industry. So let's look at this stock using Q charts. TORC. No, not TORC. Okay, let me try to open it with my desktop. Okay, click the grid button so I can get the symbol properly and type it here. No, what happened? TORC. Click the grid symbol. Okay, somehow the ticker symbol is very different. Okay. Anyway, the ticker symbol is very different. It's not the Reuters symbol equivalent. It is ACET. Just to make sure. Very interesting. Anyway, TORC.O, the ticker symbol is actually ACET. That's fine. I'm not going to investigate why it is so. But if I look at the stock, it went up sharply on Friday. Thursday, we already had a bullish flow candle. Thursday and Friday, it was starting to go up. Weekly was looking okay. It's a biotech at a lower price. So we would look at it using fine-tuned chart. In this case, you don't have a buying opportunity because it seems that the price move happened at the end of the day. So if we carried out this exercise in the morning session, you don't find this as a buying opportunity. That's fine. This is a technique. You may not find every buying opportunity using this, but very powerful technique. What is the technique? Let me explain that one more time. We can create number of universe of stocks using different criteria. Right after market open, let's say around 9:35 a.m. Eastern Standard Time, we can carry out a fundamental analysis of the entire universe, whether it has 700, 800 stocks or 2,000 stocks, doesn't matter. Carry out the fundamental analysis, calculate the scorecard, go to the scorecard and look for 3-star candidates or 1-star candidates, or simply stocks going up, or use this pressure button, stocks going up with pressure. And right around 9:35, 9:40 a.m. Eastern Standard Time, after market open, you could find the strongest stocks. Then look at them using at a glance and fine-tune chart, see which one is giving a proper buy setup and buy that. Using that, I could buy CRDF and you could apply that technique every day. Let's now conclude the market outlook and preferred trading direction. Market was bullish this week. More sectors went up than went down. Friday was bearish, however, market futures are at support. Therefore, my market outlook is bullish. It went up for the week and is at support. So I may change to green color. My market outlook is bullish and my preferred direction is also bullish this week. Of course, if the memory supports break next week, then I will be ready to change my preferred trading direction, but right now it is bullish. And one more or few more stocks, maybe I may look at one more stock before ending. I saw some of the healthcare stocks and I told that those industries, healthcare industries, seems to be strong, and I think FLGT, is it a healthcare stock? Yes. Fulgent Genetics. This looked interesting, and I saw this pattern just now in another stock also, isn't it? Where I mentioned because of a sharp pullback, I don't expect the weekly to turn cyan immediately, but it has a very bullish shape candle. Color has changed to neutral. In the daily, very nicely, it regained the yellow direction line. It's already above the white direction line and it started to go up. So I already took a long position in this stock, and you see, though Friday was weak, Friday it went up sharply 8.4%. Thursday also it tried to go down but recovered nicely. This is also a stock I found using probably the technique that I mentioned to you, or you could find it using top-down approach also, because medical equipment and supplies industry seems to be relatively strong, or at least was so when I bought it. Don't remember exactly when I bought it, but I bought it somewhere on the right hand side here after this drop. Let's check it out. FLGT, how is its fundamental and industry? FLGT .o, and I'm going to end the session right after that. FLGT, healthcare services industry or advanced medical equipment and technology. Let's look up the industry while it is retrieving data about the peer stocks. Look up the industry from QH. This is what I mentioned already, and because we are looking at QH, Q Vital every day, we know which industries are strong, which stocks are 3-star candidates. Healthcare services looks relatively stronger, and if I look at the alternate industry, advanced medical equipment and technology also gaining strength. As I mentioned earlier, usually I just look at industry unless industry and alternative industry are very different. So industry is looking strong, and if I look at fundamentals, overvalued but excellent earnings growth, high growth stock, 3 successive quarters high earnings growth, and the short squeeze potential. So I looked at all that when I bought the stock. I already have a long position in this, and I have long position in several others. Okay, one promise. This is the last one, and different ways you can trade using Q techniques and different stocks. And I cannot help mentioning this penny stock, which I shared earlier also. If you followed my videos and web post, I bought it somewhere here. I booked profit here. I bought it thinking I will hold it for the long term, but I am more tuned towards shorter term trading. So when I saw multiple days with longer upper tail near white direction line, I booked my profit. But I knew the stock's fundamentals were strong. And let's check that out. SYN, low price biotech. At 50 cents, maybe I will sell it at $5. But I already made significant profit in this stock. And I entered it again. Let's check it out. Fundamentals are strong. Okay, while fundamentals are being looked up, let's go back to the stock. So I bought it either on Wednesday or Thursday. Wednesday had a nice candle and I already booked profit, so I knew about the stock. I didn't wait for the weekly to turn cyan. It was regaining the weekly support. I was aware that the weekly support was there. Just like S&P 500 even futures held on to the support, Dow and everything held on to the support, Nasdaq also. The memory supports have a tendency to support price very well. Therefore, I could have bought it on Wednesday or Thursday. I have bought, don't remember, one of these 2 days. On Friday, again, it went up. And maybe I typed it wrongly. Sin or Sim? S-Y-N. So it's S-Y-N. S-Y-N. It's biotech. Let's look at biotech's industry. We saw medical equipment was strong, relatively speaking, and I think biotech was also that. Yes, biotech was also that. It was weaker in this period, but turning cyan. And I think the stock's fundamentals were good because I bought it already and made a profit from that. Give it a few seconds more. Yes, not only undervalued but has a decent earnings growth also. That was the reason I re-entered the trading. You know, one person commented to me today that he is finding it difficult to find trades, and I was wondering, the reverse is true for me. I'm finding too many trades. I cannot take so many on my account. So if you are one of them listening to me and wondering why you are not finding trades, you may just watch my videos, look at my posts, and try to find out the different steps you are taking and I am taking. And if you fine tune little bit, I think you will be again like me, able to find too many trades, and that we probably cannot take unless we have $1 million account like some of you have. Good for you. It's my pleasure to have you all here with me, and I look forward to seeing you in my next session. One more announcement I want to make. Every Wednesday I used to run the session not only on YouTube but on Zoom. But I see there is not much voice interaction. If it is chat interaction, we may run it on YouTube itself. That will make my life easier. I have to control only one program, not Zoom, and then also the YouTube live casting. So please allow me to continue the weekly web Wednesdays meeting, but it will not be on Zoom. It will also be on YouTube live. I'll that time is fixed 8 a.m. every Wednesday. So I look forward to seeing you in that session again. Thank you again. Have a great weekend. Keep safe and trade profitably. There is absolutely no reason not to do so. Thank you. Bye bye.